All right, welcome back to another episode of the Black Bullion Show. For gold pricing, don't just look at inflation. At least, that's what Gary Tanashian says at Kitco News. So before we begin, just have to say, if you're new, please hit the subscribe button and also please click the like button to help get this economic evangelism out there to the masses, get more people into precious metals. And if you just want to get a quick synopsis of the video without having to watch the full thing, check it out in the description below. So, Gary Tanashian just wrote this article called Updating the Macrocosm of Gold Stock Fundamental Indicators. Now, as we see deflation on the horizon, some gold skeptics see bearish behavior in the near term for gold. Take a look at this solar system picture here. If you take a look at these planets, Gary Tanashian created this, and basically what he's showing is that the bigger the planets are, the stronger the metrics, and the smaller the planets are, the weaker the metrics. So obviously he likes to focus on gold rising versus stocks, economic contraction, confidence declines, and also yield curve flattening or stopping its flattening and steepening. So let's take a look at some of these metrics that he talks about. So the first one is gold rising versus stocks. Now, for him, he focuses on the S&P 500. So obviously, here's that relative to the S&P 500. Number two is economic contraction. Obviously, with record-setting unemployment rates and retail sales, we definitely have that. Number three is a loss of confidence. Even though we are pumping the economy with counterfeited currency, Main Street is a little bit above 20% unemployment and counting. Even Jerome Powell said in a 60 Minutes interview that we could be hitting 30 percentage points of unemployment. And number four is the steepening or flattening of the yield curve. The aversion, in my opinion, is more of like a warning shot, while the steepening brings the economic change. This is what Gary Tanashian says. The steepening of the curve brings the change. You might ask why. Well, the reason is because there are two root causes or potential options for steepening. The first one is inflation expectations, and the second one is risk aversion, which right now, I think it might be the latter of what we're seeing as far as the curve steepening. Now, obviously, as you can see here, it's steepened quite a bit in that middle March time, obviously, and it went down, but now it's starting to slowly trend back upward again. So, obviously there's some risk aversion happening, and I'm curious to see what it looks like as the week moves forward, because the gold price is starting to move up a little bit more. So obviously I'm starting to think, well, maybe that yield curve might start to steepen again. So let me know what you guys think. Are these metrics important, or is inflation still the king when it comes to the gold price metrics? Let me know what you guys think in the comment section below. Thanks again for watching. Please give the video a like, and also please subscribe if you're new. Thanks again. It's Black Bullion.